Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Mary has a question for me about open interest. And Mary says, well, she sees that it's easy to get in, but, will it be very difficult to get out? You got to remember that the market makers, they don't see your orders, so they don't know if you're, trying to get out. If you're offered above the market, they don't know where you are. What I would recommend, Mary, is, quite frankly, if you trade, let's say your normal trade size in options is 10 or 20. What I'd like you to do is maybe just trade a one lot. See how easy it is to get in. You possibly want to get out. Trade a one lot, and then it probably won't be a huge economic harm in trading a one lot to see how feasible it is to get in and get out. That's really the best way to do it. The bid-ask spreads really don't change each and every day. So when I showed you those bid-ask spreads, I showed you in December through many different currency pairs, 6 to 8 cents wide, which is very reasonable. They're pretty much like that every day. So, but again, I don't want you to trade anything that you're not comfortable with. That's my job is when I'm teaching options is, and Jack brought this point out about confidence. When you're trading well, you're probably confident in your own methodology. And when you're not, you're probably fighting something or maybe using somebody else's methodology. So, be consistent, but again, try the product out, but at the most smallest increment that you think is reasonable. And so one contract, of course, would be the lowest. Jack, do you have any comments on that about confidence?
Yeah, I think you said it well. And as I said, even if you were handed a trend trading model that had worked over time by somebody, and it's new to you, and it has maybe even moving average or some systems that you're not quite familiar with, he may have traded, the person he or she had given you that model, they may have traded that successfully for many years and made a lot of money. You look at it and say, well, I'm not familiar with these indicators, I'm not happy with these time frames, so therefore you don't have confidence in it, so you're not able to trade it with the discipline that it takes. Confidence and discipline can tend to go together in terms of a long-term success. Sometimes you can get overconfident on your ability to make great trades, and that's when you start to lose track of money management and risk and all those things. But in general, long-term solid confidence comes with discipline, knowing that you're going to have bad periods, but if you stick with your system, you're going to make it back sooner or later. And there's where the discipline, and confidence in the system kind of fuse together to make you successful over the long term.
Great point. Here's one from me, Jack. Rudy asked me, so the lot size is leverage, he calls it leverage, or multiplies 10 to 1. It's actually, if you look at it, it's 100 to 1, if you will. And all we're trying to do is create a currency value, or what we call an ISE pair value. So if you look at the dollar against the Canadian, and it's trading at 105 or wherever it is today, let's see, you multiply that by 100, you come up with that $105 index value. And every option, no matter which one you're trading, is always multiplied by 100 for the premium. So if you do that simple math, one contract would represent 10,500. Some of the other currency pairs, to actually calculate the pair value, might be multiplied by 1 or 10, like in the instance of the yen. We don't modify it at all. But the option premiums are always multiplied by 100. You can go to fxoptions.com and go to frequently asked questions or the trading convention and learn more about that, Rudy. So I hope that helps, because I don't have a lot of time to explain every one, but I think that you'll get the gist of it if you go to FX Options. Jack, what time frame do you cover when you're talking, in your different, either your currency currents or your paid subscriptions? Does it vary?
Yeah, it varies a lot. In the Forex service, the spot service, our time frames are compressed. Sometimes we have 1 day, 2 day holding periods, sometimes less. In the currency option service, we tend to look multi-month. Multi-week is the shortest time period. If we get something right away and we want to take something off the table, but multi-week and multi-month is really more the time frames we look at of the options. In the currency ETFs, exchange traded funds, those are always entered with a multi-month time frame, trying to catch a very long-term trend, maybe even multi-year if we can stay that long.
Got it. Let's see. Mary, I don't want to just belabor this, but what I would recommend, as far as getting, I cannot give you a guarantee about getting in or getting out. That's just something that's not possible. But you might want to sign up for, we're going to have a trading contest. You could virtual trade at a lot of different brokerage firms, or, as I said, you might want to trade on one month. But there's no way that I can guarantee that you can get in or get out, because that's just it's impossible for me to guarantee that. But I would love for you to continue to come to the webinar. Seek out virtual trading systems also. Your broker might have that. Rose wants to know what's the best way to trade the BRIC currencies, Jack?
The BRICS being Brazilian real, Indian rupee, Russian ruble, Indian rupee, Chinese yuan. These are emerging market currencies, not available on the option side per se, unless you go over the counter, which means it's not listed on an exchange. They have to be made by a broker. You can trade those in the spot Forex market, except for the Chinese currency. Spot Forex market, is just the cash market. Or you can trade them. There's most of them are available in ETF, exchange traded funds format, which is very low leverage type of thing. And we like those currencies a lot. I mean, we don't trade the Chinese currency because it doesn't move. It's pegged to the dollar. But in general, those are driven by the the environments, and they trend nicely in risk appetite, risk aversion environments, and they're very clean cut and clearly defined to the environment that we're in. So when I talked about that environment, they very much, their trend matches up very tightly with the environment that we're in. So they're good for longer term trend trading, we think. We don't like to trade them intraday. Some of the institutions can trade them because the spreads are tighter for institutions. But for retail investors, I suggest you really step back and look and position trade those multi-week, multi-month type of moves.
Interesting. Karen has a question about the delta change. Yes, Karen, the delta does change because if you think of it, it's a model, it's an option pricing model that uses different inputs. The inputs are the underlying pair value, strike price at time left until expiration, the interest rate differential, and the volatility. So if the underlier changes, the pair value, well, the deltas are going to change. So yes, those deltas will change intraday. And again, a great way to look at leverage when using options is that out-of-the-money options give you more leverage. Leverage is a double-edged sword, as we all know. Doesn't mean that it's a better trade if you have more leverage or less leverage. It really is just about risk, so you have to think in those terms. There's a question here about implied volatilities. Where do you and I think they're going, Jack? And I think we both would agree that we're not certain that we know where the volatilities are going, but you need to sort of stay abreast of the option premiums. They've been reduced significantly because of what we're seeing lack of volatility.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.